session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. Nice to see quite a lot of you here. And I think people are still joining. So wishing you all a great evening. Without much ado, let me push on to the topic we have to discuss today, because we covered quite a lot of, shall we say, area in share capital and debentures. So we are now somewhere in transfer and transmission of shares. We saw the difference between transfer and transmission. Am I correct? We were here. Yeah. So we spoke about how it is there, procedure, and this is only for physical share certificates. For dematerialized, no, there's nothing. Okay. So if you're having a physical certificate and if you want the transfer to be recorded, then this is the procedure, right? And all the instrument of transfer in form SH4 should be accompanied by the share certificate. If in case the share certificate is not in existence, meaning the company has not issued it or whatever, then at least the letter of allotment. We saw this condition. We said it should be done within 60 days of the execution, date of execution. Now, in case of loss of IoT means instrument of transfer, or delay in submission of IoT, board at its discretion and conditions of indemnity may register the transfer. Depends on the board's decision. In the case of government companies, the provisions relating to transfer discussed above do not apply to bonds issued by government companies. Meaning, see, when the bond is issued by a company, it becomes a debenture. But where government companies issue it, they may still call it bond. For those bonds issued by government company, the transfer conditions don't agree. See, for debentures also, these conditions will apply, because this is what transfer of shares includes securities, complete. Okay? Not only for shares. This is for debentures also. Similarly, provisions not to apply to shares held by nominees in a government company. So when nominees are holding shares in government company, the above procedures will not apply. But believe me, for government company, there are other procedures which are prescribed by the government. They will apply. In case of partly paid shares, friends, normally when shares are transferred, it is the transferee who will send the instrument of transfer, because the transferee is interested in getting his name entered in the register of members and becoming a member. Therefore, he will send. But suppose it is partly paid shares, then transferor may be selling partly paid shares, or there might be a forgery and all. So whatever it is, where there is an application for transfer of partly paid shares by transferor alone, see, the transferor is saying, I am transferring these shares to so-and-so, and they are partly paid. Then notice is to be given to transferee in form SH5. Okay. This is again only for partly paid shares. Okay. Then no objection certificate is to be issued, received from the transferee within 2 weeks from date of receipt of notice. So the company should send an NOC form and say, we have received a transfer of partly paid shares, kindly confirm. If no objection is received, only then. Otherwise, if no NOC or no reply for that for 2 weeks from the transferee, then the transfer shall not be registered. But again, believe, when it is coming from the transferor, where the notice is being given by the transferee, no problem. If he himself is giving it, why? No need for further thing. NOC and all. But where the transferor is sending the notice, then we'll have to give an NOC to the transferee. Right? This is to protect the transferee. In case partly paid shares are being forgedly transferred, where his signature is forged and transferred, he is given one more chance to say, no, I have not accepted these shares. No. Or if he does nothing, if he does not give NOC, straight away the transfer shall not be registered. Okay, a lot of people have joined. Good to see some of the usual participants, including Darshan is here. And I see a lot of people. Good. You know, earlier they used to give the names of the location from where you, that would give me a lot of information. Now they are giving only region. So I can see central region, western region, southern region, northern region. Get to see even one entry from eastern region. Okay. Now, we have already told you what is an international financial services center, where these are, back offices or accounting back offices and financial transaction sorting houses which operate for customers outside the jurisdiction of the domestic economy. They are also known as offshore financial center. So if you go to Hyderabad, you will find there's a place called Cyberabad, where you will find there are huge financial street where we have a lot of IFSC centers, IFSCs, International Financial Service Centers, where basically the idea is they cater to clients who are outside India, outside the jurisdiction of the domestic economy. So they want to give some exemptions. See, the beauty is these companies are earning money in net foreign exchange, NFER. So they are getting net foreign exchange. Therefore, they should be given some concessions, which is why you will find many sections of the Companies Act are made not applicable to IFSC or made applicable to IFSC with modifications. Okay. So basically an IFSC is an offshore financial center, since it deals with flow of finance or financial products and services across borders. For example, insurance products may be sold from India to foreign customers, or insurance claims may be settled, for foreign claims may be settled, but the process of settlement analysis and all may be in India. Okay, basically outsourcing, that's all, nothing else. So specified IFSC company is one which is licensed to operate an IFSC. So they will get a license and they are called specified IFSC company. They may be a private company or a public company, depends. Why we define this IFSC here? Because you will come across the term IFSC in this topic. So I don't want you to ask me what is IFSC. So I'm giving it here. Right. Now, in the case of, company shall, please note, company shall, unless prohibited by any law or order of court, company shall, unless prohibited by any law or order of court, deliver securities as follows. Meaning, once securities are allotted or transfer is registered, the physical certificates should be delivered within the due dates. In case of subscribers to the memorandum, within 2 months from the date of incorporation. In case of any allotment of any of its shares, public issue or whatever, private placement or whatever, within 2 months from the date of allotment, the physical certificate should be delivered to the shareholder member. In case of transfer or transmission of securities, within 1 month from the date of receipt by the company of the instrument of transfer or the intimation of transmission. For transmission, we don't call it instrument because it is not by act of parties. It is by operation of law. So that intimation should be given. In case of any allotment of debentures, within 6 months from the date of allotment. So now for all the normal companies, it is 1 month, 2 months like that. But IFSC may deliver securities within 60 days. They get some concession. Okay. Possibly because their shareholders would be abroad. So they are given slightly longer period to deliver their share certificates. So Shreem Lakshmi Jewellery Store Private Limited was incorporated on 27th August 2020 with 30 persons as subscribers and with an authorized share capital of 1 crore divided into equal number of shares of 1 rupee each. Each subscriber subscribe for 1 lakh shares. Okay. Advise the company about by what date it needs to deliver the share certificates to members. So 30 into 1, 30 lakhs. So 30 lakhs is the paid up capital. So each subscriber has subscribed 1 lakh shares. Now they have to be allotted the shares now. And the share certificate should be again. Hint is do not include the date of incorporation while counting the number of months. So allotment. In case of any allotment within a period of 2 months. Now note, it is 2 months. In the earlier example, it was 60 days. Now it is 2 months. Madam, that IFSC is different. That IFSC code is different. That is a unique code given to each branch of each bank. So by which the program for check clearing program, they use that IFSC code first. So that is called IFSC. That has nothing to do with this. Though they have both got the same abbreviation, no confusion. I think that is international some code. C is for code there. Here it is center. IFSC. Let me see. Since you have now raised that issue, let me see. IFSC. See, that is Indian Financial System Code. Full form of IFSC is Indian Financial System Code. It is an alphanumeric code. Earlier it had 9 characters, now it has 11 characters. Okay, so IFSC. Whereas this is International Financial Services Center. Unfortunately, both have the same, abbreviation. So don't get confused. But okay, good question, but I hope I answered. And IFSC code will be in your passbook. It will also be on your checklists. IFSC code. Okay, International Financial System Code. This is international code given to all branches of all banks across the world. Okay, just like your ISBN code for books. So 27th August 2020. That means 1 month will get over 26th September. Sorry, 27th September, 1 month. Then 27th October 2020. Okay, so two months. Within 2 months you have to deliver. So if you ignore 27th, it will become 28th. Please note why 27th October. If you don't ignore 27th, the correct answer should be 26th October. Because 1 month will get over. 1 month will get over on 26th October. 2 months will get over. 2 months will get over on 26th October 2020 only. But we have to ignore the date of incorporation. So you will start from the next date, that is 28th August, which means 27th October will be the correct answer. You understand? Beautiful. So, see, these are, I think, examples given in the institute material or I think in the institute exam, whatever. So, I've included it here as a sort of concept. Where the securities are dealt in a depository in dematerialized form, the company shall intimate the details of allotment of security to depository immediately an allotment of securities. That's all. Once the board resolution is passed, allotment is done. In fact, the share transfer agent will send the information to the depository. Because how you will decide which depository to send? Suppose your depository is CDSL. Then in your application, you would have given the DP ID. Now, using the DP ID, they will know to whom it has to go. Depository participant ID, they would go to whichever. So that based on the DP ID which you would have given, they will inform the depository and the depository will take it. Thereafter, when you go to your DP statement, you will find it is showing there. After allotment, suddenly you will find maybe the allotment, you will see the note, you will see the in SEBI or in your broker's website, you will see Mannar and Company Limited share allotment completed in the public issue allotment over. So immediately you go to your DP account and see, you will find your, maybe 1 or 2 days later, you will get it. Okay. Good. See, DP transfer and transmission is straight away. It's all happening online, Baba. At the end of every day, all this data will be collected and dumped on the share transfer agent of the company or the company secretarial department who will be running the share transfer agent. So through the NSDL and CDSL leased clients, the huge volume of data will come. Then that will be netted off, and finally the register of members can impact now. It will be done through a program. That program will run in the evening, so that next day the register of members will be completely updated straight away. So that, and so on, it will keep happening. It happens daily, it will happen. So that at any time, if a shareholder sees, he will find he is a member. Okay. So it's automatic. And you see the settlement time is T+1. That means today's transaction date. Then you have to pay or deliver the security next day. So which is why most DPs and brokers, most brokers will ask you for a POA, power of attorney, because you will sell the share today and not give delivery. Then it will be a problem for him. Therefore, he say, I want POA. Using that POA, he can operate your DP account. So that the minute you sell, he will. If you decide no POA, then every time you sell a share, you have to give him DP advice in paper form. Or some brokers may have an online confirmation format by which they will ask you to confirm and give it. Whatever it is, there should be some kind of a control over it. Penalty for default in case you don't deliver the security and all. Fine of 50,000 for company, and for officer in default also fine of 50,000. Any depository or DP who has transferred shares with an intention to defraud, think about it. If a depository participant or a depository itself is taking some action prejudicially and transferring shares fraudulently and all, then straightaway action under section 447. Because there's a huge thing at stake now. We are totally trusting the DPs and depositories. So if they do any fraudulent activity, action under 447. You remember? 3 times the amount. Maximum 10 times the amount. This is for personation of shareholder. That is, somebody is deceitful personation. That is, you can say, using false identity, maybe by forging the signature, whatever, as an owner of any security or interest in a company, or of any share warrant or coupon, etc., and thereby obtains or attempts to obtain any security or interest or any share warrant or coupon, or receives or attempts to receive any money due, then straightaway imprisonment, because this is state fraud. Okay, forging signatures and all that. So straightaway imprisonment, minimum 1 year, 3 years, and fine, minimum rupees 1 lakh, maximum 5 lakhs. This is applicable to any person. This is not for company. This is for any person. Falsely impersonating. Impersonation means acting as if he is that shareholder and trying to take the dividend or whatever. Okay. See, but one beauty is, earlier it was possible to do all these things. Today, for listed companies with dematerialization, I'm not saying it is impossible, no. But I'm saying it's going to be very difficult. There's so many checks and balances. But if somebody foolishly gives their DP password, code, broking code, everything to somebody, then that man can do anything. And tomorrow it will be very difficult to trace also, because the user ID password will be the owner's. You have to prove that he misused it and all. See, the company will simply say, look here, you don't come to me. You have to prove so many things. Very difficult. Which is why your DP ID and all, the DP password and a DP ID ka user ID and password, never share it with anybody. It is yours personally. Broking account also. Because most broking accounts are linked to a bank account. So bank account payments can be initiated and all that. But be very, very careful. See, today with digital banking and mobile telephony, it's going to be, you're exposed. So you have to be very, very careful. Especially while you are using credit cards and all that. And while you're, in fact, that way ATM frauds are huge. You know that many times you will find ATM frauds happen. You have to be very careful about that. Okay. One of the reasons why, you're not going to believe this, some of you may really get upset with me when I say this, but till date, I have never entered an ATM. I have never drawn cash. Till date, I have never entered a ATM. If I need cash, I send my office person with a check and they get me cash. I know it sounds very stupid, old-fashioned, but I have never gone into an ATM to see how. Even once, when my driver wanted to go to the ATM, he said, "Sir, I want to draw 100 rupees from ATM." I was very much interested in seeing how this ATM. I asked him, "Can I come and see how you do it?" He was looking at me. Then I went, so he's surprised. He goes to that ATM, then something he does. Suddenly money is coming out. I was really shocked and surprised. I'm not afraid to do it. I can't do it. I don't know. Maybe that makes me very, very old-fashioned Buddha, but I've not gone to it. See, today, that way with GPay, thanks to our enlightened Prime Minister and his demonetization and digital currency and all, today GPay is so beautiful. I have no risk for me. Everything is working. My PIN, I have control over it. Nobody knows it. And so I go there, control is with me, not with, I scan the QR and then the control is with me. He can't do anything there. I push it to him. Money goes there, then I get close and come out. I don't reveal anything to him. My PIN is in my mobile only. No control. I don't press anywhere that side. So GPay takes care of that. I think digital currencies are better than physical currency. Imprisonment includes here, sir. Yes. Jasprit ji, I'm sorry. There I should have removed it. It is if I have not mentioned anything, it is there. And don't you think this section needs imprisonment? Such a serious fraud, yeah. Impersonation of person, very bad. So imprisonment is there. We are coming to possibly one of the important topics in this topic. One of the important subtopics in this topic, which is refusal to register, transfer or transmission. Refusal to register. See, basically, private company can refuse because there is a restriction on transfer of shares and all. But even there, when a private company can refuse to register, restriction, see, a private company can, by its articles, restrict the right of its transfer of shares. Doesn't mean that it can prohibit. All it means is, if a shareholder wants to sell the share in a private company, the private company's articles will say, before selling this share to a third party, other than the existing members, an offer should be made to the existing members first. An offer should be made to the existing members to transfer their shares. I mean, that these shares are going to be transferred. Then the auditor or a registered valuer will prepare a valuation, arrive at the fair value of the share. So the offer should be first made to the existing shareholders at the fair value. And 15 days time will be given. That is usually what the articles will say. Within 15 days, if the existing members do not purchase or do not accept to take the share, then, in fact, about, I think, 12 or 13 years ago, in Chennai, one huge building was there, owned by a gentleman, a lady from Mumbai, a Sindhi lady from Mumbai. So she was interested in selling that building, the heart of the city in Chennai, worth crores. But unfortunately, that building was held by her through a company. So she was having something like 75% of the shares. Then another 10% was held by one gentleman. Then another 15% was held by some donkeys, some stupid fellows. They were not willing to cooperate. So they were refusing to sell because they were saying, we can get a better price, we can get. So she identified one excellent developer who was willing to develop the property and all. So he said, I will take. And he said, I will buy the shares from you. You do a proper valuation and all. We did. Basically, the company ka valuation is the land. Arrangement was arrived at everything. 85% of the shareholders are agreeing to it. But that 15% fellows are not willing to agree. Now, they were keeping on saying, you can't do, blah, blah. Then that builder consulted me. He said, Sir, Srikanth sir, it's like this. what to do. This lady, we want to purchase the property and construct and all that. And then we had a consultation, we met. And then I said, look at private company, why don't you offer your 85% shares to these 15% wallahs? Oh, what do you mean, sir? No, you make an offer. Can they buy? No, they are useless fellows sitting in poverty. Simply greedy, they are delaying the process. So I said, then we organize everything. Then we prepared proper notices. We got a registered valuer to do the valuation. Anyway, it was being valued. Valuation, share value was arrived. Then I drafted a per share rate is 6,700 rupees or whatever it is. In case you want to buy from us, please tell tomorrow. But if you confirm within 50, we should hear from you within 15 days together with the DD for the value. If you don't receive the payment and your communication within 15 days, we shall presume that you have no objection to our offering these shares to any other third party. That's all. That's it. With that, we proceeded. 15 days we waited. Those people started refusing and all. Then they went for consultation to another lawyer. That lawyer read our notice thoroughly. Then he advised them, boss, these people are going as per your own articles. If you want, buy. No stay and all can be obtained from any court. Which court will stay? Why should they stay? Because they are going per your articles only. In your articles, it is there, he was going. So no NOC was received, but 15 days later, no reply from them. So we proceeded to transfer the shares to the builder. Then the builder got it. Then the builder was happy. But again, you see, builder took a risk. So then another 10 days. 10 days, this way, that way. Then these 15% wallahs went to the builder and said, you buy our share also. Then the builder got into this. He said, look here, I have got 85% now. Valuation goes differently. Finally, whatever price you pay, we will take. And they sold the share and they ran away. My client, of course, got her money. She was happy and proceeded with her life. So all I'm trying to say is, I'm just giving this practical example to you. See, knowledge of law is one thing. Applying the law, you should tell and get solutions to your clients or to your company. Then she, of course, sold it, and that building, I keep walking by. When I go for a walk, I see that building. It's a multi-story building now, with shops and all. This lady is known in Bombay. When I went to Bombay, she invited me to her house, and then they took me to lunch at Radio Club and all. Okay, here we have Mr. Pranay Vasishta suddenly coming in. And thank you for that, sir. I've scored 70 marks in law. Hey, wait, that's great, yeah. Let me congratulate Mr. Pranay Vasishta. I remember Pranay, especially the spelling Pranev, Pranay Vasishta. One of the good students who used to ask questions and be active. So that gives me hope about Darshan and Manav and Jaspreet, all of you, I should say. Pranay was your equivalent in the other batch. Okay, he used to do a very good questions and all, and I used to really enjoy. Nice to know this, Mr. Pranay, and I wish you all the very best and look forward to hearing more news about your success. Beautiful. Okay, so let's come back to the refusal to register transfer or transmission. So even a private company cannot refuse forever. Maximum they can say, what is the reason they can give for refusal? They can say, you should have first offered it to us. That is all they can say for refusal. Or they can point out some lacuna in the form. They can say the form should be having these, you are not giving. Or physical certificate. Some reasoning they can give. That's all. They can't bluntly say, we want register, get out. Like that, they cannot say. So, it is the duty of the company to register the transfer and deliver the certificates within 30 days. Okay. So, in case they don't do that, okay, from the date of delivery of instrument of transfer or intimation of transmission, friends, this is the date. Please note, this is the date. This date. Sorry. See, this is the date. From this date, you begin. From this date, date of delivery of instrument of transfer or intimation of transmission. Within 30 days, notice is to be given to the transferor and transferee. Within 30 days, with the reasons for refusal. notice shall be given, giving reasons for refusal. Then, on receiving the notice from the date of notice, the transferee has the right of appeal to tribunal within 30 days of receipt of notice of refusal. See, I have given here that as if this is given exactly at the end of 30 days. Not necessarily. Whichever date within this 30 days, the minute you get your notice of refusal with reasons for refusal, from that date, within 30 days of receipt of notice of refusal, you can go for appeal to the tribunal. That is the NCLT. Okay, 30 days, no news. They keep quiet. Nothing. The company does not respond. Then the transferee can prefer an appeal to the tribunal within 60 days from the date of delivery of instrument. Please note the arrow marks. This arrow is also beginning from here. So, within 30 days, notice of refusal with reasons. Then another 30 days for appeal. No notice of refusal is given. Then, beginning from the date of delivery of instrument of transfer or intimation of transmission, within 60 days, you can go on appeal to the NCLT. Okay? Hope this is clear. This is for private company. Public company. Shares or other interest of a member in public company shall be freely transferable. Private company, at least I gave you how they can restrict the transfer. Public company, no restriction. I can sell to anybody. I don't have to take your permission to sell. No way. But some public company, without sufficient cause, refuses to register transfer or transmission, then same logic. From the date of delivery, a notice of refusal with reasons. So from the date of delivery, within 30 days, intimation of refusal may be given for sufficient cause. But if no sufficient cause is not given, but refusal is made, then appeal by the transferee to tribunal within 60 days of receipt of notice of refusal. 60 days from the receipt of notice. Here 30 days from receipt of notice. Here 60 days of receipt of notice of refusal. Okay. Company does nothing. No notice, no intimation, nothing. Then appeal by transferee to tribunal within 90 days in case no notice. From this date. See, the arrow mark begins here. This is the date of delivery of instrument of transfer or intimation of transfer. From this date, within 90 days, appeal. In case company has 30 days to give intimation of refusal with reasons, you can go on appeal within 60 days from the date of receipt. Got it? So the upper limit, if I can say so, is 90 days from the date of delivery of instrument of transfer. Right? The company is smart and then they give on the 5th day itself, they give the notice of refusal. Intimation. Then you have to go from the 5th day within 60 days, you have to go off for appeal, which means you won't get 90 days from this date. Because this is given now. Suppose they do nothing, then within 60 days, within 90 days, you can. Right? But still you have to give them the 30 days time. You can't go within 30 days because that 30 days time is given for them to respond. If nothing is heard, then on the 30th day, then from 31st day onwards till 90 days, you have time. Right? Hope this is clear. See, these days and dates now are very important. 60, 90, 30, 60, all that are very important. Okay. So that's why this diagram, if you try to remember, it's enough. Now, you have made an appeal to the tribunal. Obviously, they have refused to transfer. So you're gone. See, sometimes, this will happen. Believe me, if you are going to transfer your shares in TCS, believe me, TCS, simply they will transfer. In fact, you will go through DP only. You won't have this problem. Believe me when I say this. This will happen when, when there is an adverse takeover by, say, under the SEBI takeover code, where somebody is trying to take over a company, there the taken over company board may refuse to transfer those shares. And they may intimate to the share transfer agent not to transfer this block of shares. And whenever it comes up, the share transfer agent will send a message saying, refer to, or the share transfer agent may block it and say, block, whatever. That is wrong. They cannot do it. But if they do it, then the persons whose shares are being transferred now, this will happen because they may try to say, see what they will do. They will go. The company will also go to the tribunal under a different section. They will say there is a transfer, there is a takeover by this person, and we feel that it is prejudicial to public interest if he takes over. Like that, they will say. But whatever it is, there will be a dispute before the tribunal. So this appeal also will come and attack there. And after hearing the whole case, tribunal will have to take a decision whether this transfer is acceptable or not. Whether if I permit this transfer to happen, the transfer will result in acquisition by the company, which may be against the public interest. So if finally the tribunal feels, yeah, this person has a reputation of taking over companies and destroying them, dismissing employees and all. So we don't think it's a good idea. Therefore, they will dismiss the appeal. Possible. Or they may direct that the transfer or transmission shall be registered by the company, in which case no appeal. Company shall comply with the order within 10 days of receipt. That's all. Sometimes, there may be an application for rectification of register. That might be prayed, in which case they will direct the register to be rectified. And finally, in case the party has suffered any damages, they may direct the company to pay damages. For example, in the meantime, the share price might have gone up. So because of this refusal, he could not book the profit, right? So they might say, give him the compensation. That depends. Again, the tribunal only will decide what will be the compensation. Or they might say, we can't give you that type of damages. But as a token damage, we will say, let the company pay 50,000, 1 lakh. Whatever they fix. Refusal to register transmission is very powerful offense, and the tribunal and the penalty for contravention of an order under section 58. When an order is made under section 58, if you contravene, then the person contravening the order shall be sentenced to imprisonment. Minimum 1 year, maximum 3 years. Okay. And fine 1 lakh to 5 lakhs. Imprisonment is there. Jasprit ji, from now on, I won't tell you, please. If I have not put it is not there, then it is there. See, 58 deals with refusal to register, transfer or transmission. 59 deals with rectification of register of members. See, this is a very old section, which has now they have given it in this. Earlier, this was combined in a single section 111A in the old law. Okay, now they have made it 2 sections, 58 and 59. 59 is rectification of register of members. See, in the register of members, the name of a person has been entered without sufficient cause, or after having been entered, it has been omitted, means removed, or there is a default or unnecessary delay in entering in the register the fact of any person having become or ceased to be a member. See, they are not refusing to register transfer. Here they are saying, your transfer okay, but they are not entering it in the register. There is a default or unnecessary delay. That's why I said now this type of an application will happen, or appeal will happen only for closely held companies, where there's a dispute between 2 families or 2 things, then also the controlling family will do all sorts of nonsense. So the other group now will go to the tribunal under application under section 59. So mostly you will find if there is a dispute with regard to registering a register of members or rectification, you can also be sure that there will be an application for oppression or mismanagement pending before the tribunal on the same matter by somebody. It's quite possible because there would have been a dispute, and these disputes, they'll be converted into oppression. The one group will say they are oppressing us. They are acting in a manner which is oppressive to us, like that. And finally, tribunal should think, see, but I have had some experience in these oppression matters. Final bottom line is 2 groups will be there. One group wants to sell and go. Another group doesn't want to sell because they feel that they can get a better price. That's all. It will be basically property dispute. But unfortunately, the property will be held in the name of a company, or the business is run in the name of a company. So there are two different views on how the business should be disposed. One group may want to go for a sale to as a unit, as a business unit, valuation, and other group may say, no, we should run it. It is built by our grandfather, like that. All confusion will happen. In that, this application for register of members also will go. Okay. So, who can appeal? The person aggrieved, or any member of the company or the company. If you are a member from India, you can go to our local tribunal. If you are a foreigner, you can go to a competent courts outside India. Okay, there are foreign courts that can hear these matters. You don't have to come to India. Thanks to the treaties that we have signed across the world, in every country, there is an equivalent of the tribunal we have identified. The foreign member can go there and see. This is all part of liberalization, and globalization, where today we have shareholders from foreign countries in Indian companies through FDI. So they can go for complaint to a competent court outside India. Finally, here also the tribunal, after hearing the parties, may dismiss the appeal or direct that the transfer or transmission shall be registered, or within 10 days, or direct rectification of the register or records, or direct the company to pay damages if any sustained by any party. So this almost similar to 58 Kappa was not similar, except the second one and the third, which is slightly different here. Tribunal may also direct rectification of members of the records of depository where the transfer of securities is in contravention of SCRA or SEBI. See, sometimes there may be a takeover of a company in violation of the code. Then some companies can go to tribunal and say, sir, this man has not made disclosure. This man has not made an offer of buying a further 5% as per the takeover code. Open disclosure was not made. Nothing was done. Simply he gave money to the promoters and they made him the share. They gave the shares to him. Therefore, we direct that the register of members be rectified by removing this guy's name, because it was entered in the register of the company without sufficient cost, in contravention of this section of SEBI. So tribunal may rectify the member. Take it off. Now you take it off. Whatever money received, it is between you and him. He cannot be a shareholder. It will go back. If again you want to do it properly as per SEBI code and do it. So that possibility is there. Companies Act, again, any transfer is in contravention of any law, then tribunal can pass an order for rectification. Here again, the company or security holder, depository or depository participant can do it, or SEBI can do it. I told you now, where takeover code is violated, SEBI will make an application to tribunal and say, this takeover was done without complying with the code. Therefore, we pray that the transfer may be ignored and the register of members may be rectified by removal of these people's name, and the original member will be reinstated. Okay, such prayers can be heard. Nothing wrong. Now, the provisions of this section shall not restrict the right of a holder of securities to transfer to such persons, and any person acquiring such securities shall be entitled to voting rights, unless the voting rights have been suspended by an order of the tribunal, by a separate order. First, you should appreciate that this would apply to transfer of shares by a person whose name has been omitted from the register. Such persons can transfer such shares, and the buyer thereof will be entitled to voting rights. See, suppose my name was entered and then omitted from the register. I am the owner of the share. Yeah, I can transfer it, and the buyer will get it in good title and can enjoy voting rights. So we have finished transfer and transmission of shares. Pretty interesting. The only area is important is this days. Remember the days within which everything should happen. Sometimes they may test you on that. Now we move on to alteration of share capital. We saw alteration of memorandum, name clause, object clause, situation clause, we saw there. Procedure, we saw there. But capital clause, I did not cover there. Why? Because I knew I'm going to cover it in detail here. So remember, any alteration of the capital clause is an amendment to the memorandum and articles. So it will require a special resolution for amendment of memorandum, right? So you have to pass a special resolution because it will amount to alteration of capital clause. There will be a corresponding clause in the articles that also will have to be altered. So therefore, you need to pass 2 special resolutions. Now, the articles of a limited company will, if you adopt table F, definitely it will authorize you, it will permit you to alter your memorandum to increase the authorized capital. So section 61 deals with alteration of authorized share capital, which is mentioned in the memorandum, which is mentioned in the balance sheet also, but it won't come into the balance sheet. It will come in the schedule, authorized capital. It is important. So that authorized capital can be increased, or it can consolidate and divide all or any of its share capital into shares of a larger amount. So consolidate and divide, or convert all of its fully paid up shares into stock, or reconvert that stock into fully paid up shares. We already saw what is stock. I don't want to waste your time again. So where a company wants to convert, it can do so. It can combine block of paid up shares into one stock. In case already stocks have been issued, then we can reconvert the stock back to shares. C, I have never seen a company do this in India. No, never. D, it can subdivide its shares or any of them into shares of smaller amount. So D is consolidate and divide. See, I am having 10 rupee shares. Okay, I can combine 10 rupee shares into one share of 100 rupees each. Consolidate. So I will consolidate and divide. So 10, I will consolidate everything. Then again I'll divide. Earlier it was divided into 10 rupee shares. Now I'll consolidate 10 and bring it into 100 rupee shares. Per share will become 100 rupees. So consolidate and divide. Another is subdivide. Now consolidate and divide, again I have never seen. A company consolidating and dividing, rarely I've seen. But subdividing, yes. Most of the big companies have subdivided. Infosys, when it began, it had 10 rupee share was 10 rupees. But the price of the share started going to 8,000, 9,000. So that, it became, if you want to buy one share, you have to spend 9,000 rupees. So it became a little difficult for people to overcome that barrier. 8,000 rupees for one share. No. So what Infosys did was, it went for a stock split. That is the exact non-technical term, layman term. Okay, is so if you're an educated chartered accountant or company secretary, you say it has subdivided its shares. But if you are an ordinary person, etc., they will call it stock split. Brokers and all, they will call it stock split. It's easy, such words are needed for the masses. Stock split. Okay, like that. So yeah, exactly, that is the stock split. D is example of stock split. Most companies have Infosys share 1 rupee share. One share is 1 rupee. Paid up nominal value is 1 rupee. Paid up value, I don't know. You check it up from the market. Let me see what is Infosys. Because my secretary sent me my portfolio statement, which I'll be reviewing tomorrow. So I will see that. The latest yesterday's value should have put. Market final closing value should have put for that. Infosys, the name. Let me see. Infosys. 1,425 rupees 95 paisa was what she has put. It must be in the closing rate of Infosys. Okay. But one paid up value is 1 rupee per share. 1,425 rupees means 1 rupee. That means 1,424 rupees and paisa is the premium. You are paying for a 1 rupee share. Paid up nominal value 1 rupee. You are willing to pay, I hope, 1,425 rupees. But that is today's value in the market here. Well, it's correct. It is not over. Maybe a little bit over. I doubt if it is overpriced. That too, today technology shares had a huge pickup today. Because anyway, I will not buy technology now. I mean, I think this is the nth time I'm telling you. Now everybody will buy thinking that there will be a rally and all. For me, already I'm well invested in technology. When nobody wanted to touch technology, I invested. Now I will not touch. I will wait for all of you to come and increase the price for me. Keep on increasing it for me. Till it reaches one level, then I will exit. Anyway, according to me, there will be a correction. But that correction is not going to be major correction, but there will be a correction. It's overloading, there will be a correction, but that correction is nothing. It's going to go further up. Okay. So this is my view. No, not necessarily the correct view, but my view is that market is not, it's not reached its real overvaluation yet. It's still got some steam to move around. But this is not the time for buying, but definitely you can. I'm sorry, I don't know. One second. Yeah. So lastly, alteration of share capital could also involve cancellation of shares not taken up and diminish share capital. Meaning, company at the time of incorporation went for 10 crore authorized capital. 10 crore. Okay. Now they feel that 10 crore share authorized capital is very not needed. So they may cancel the shares, meaning this authorized capital was never issued. From 10 crore, they might bring it down to 5 crore. That 5 crore shares were never issued. Straight away, authorized capital is reduced from what it was to what it is now. But again, I have never seen cancellation. Why should they? After all, they have paid a huge amount to the MCA for that. Let it be there. So I have never seen a company cancel. But they're still given provision where they can cancellation of shares and diminution of share capital is reduction of authorized capital. Don't confuse this with reduction of capital, where paid up capital itself will be reduced. If you listen to me carefully, you will not have a doubt. E is basically authorized capital which is not issued being reduced, cancelled and diminished. Whereas later on, you'll be seeing very shortly, we'll be seeing reduction of capital. That is a totally different concept. Where paid up capital, already shareholders have paid money that is not represented by assets, that will be reduced. Means 10 rupee share will be reduced to 1 rupee. 9 rupees, swaha, gone. 9 rupees, entry should be passed. Capital reduction account debtor, share capital account debtor to capital reduction account. Gone. The directors have done so much nonsense and they have created so much loss that your capital is not truly represented by assets. Then they have gone to the tribunal and taken permission to reduce capital. That paid up capital is being reduced. That is called reduction. Whereas only authorized capital is called cancellation. Why I'm now, you can see the amount of effort I'm putting to help you to understand. Because 100% I'm sure when I come to reduction, immediately you'll ask me, sir, what is the difference between cancellation, that is 61, and reduction in 68? Reduction in 63. It's totally different. Okay. This is paid up. 61 is authorized. Be a reduction of share capital. Reduction of share capital, totally alag hai. Totally complete sub. It's not, don't confuse this. Is it possible that the articles are silent? Yes, it is possible, because if they don't adopt table F, they have their own articles wherein they don't provide for this. It can be. It is quite possible. Then if they want to reduce the capital, what is the first thing they have to do? Those donkeys have to first amend the articles, include the provision, which is why we strongly suggest don't create your own articles. Go for table F. Table F has. You won't lose out if you have table F. Or ensure that your articles are providing for this. Okay. Please do not please do not have articles which do not provide for this. This is very, very fundamental provision. Yeah, it should be there in the articles. Without this and all, don't create articles. If you want, I will send you the template. You use it. Don't go wrong. Or prefer table F. That is why they are giving table F. Okay. We move on to section 62, which deals with preemptive right of equity shareholders. Means rights issue. Friends, you have to understand rights issue conceptually. Most of you would have heard the term rights issue, rights issue, rights issue. Even I would have mentioned to you about Reliance and all that. Rights. Very recently, Reliance Industries came out with the rights issue, whatever it is. The section uses the word, 62 uses the word, preemptive right of equity shareholder. Please note, you are the promoters of a company. You have allotted shares to yourself and to other people also. So, as a group, you are holding 60% or let us say 90% of the shares of a company. The other group, small shareholders are there, 10% they are holding. You are holding 90, they are holding 10. Now, what is the percentage they are having? What is the percentage? You are having 90, they are having 10. Out of 1 lakh shares, for example, you are having 90,000, they are having 10,000 shares. Now you are going for a further issue of capital, further issue of shares. Another 1 lakh. That entire 1 lakh, you are allotting to yourself. You are bringing in 1 lakh and you are allotting. Now tell me, what has happened to the minority? What has happened to the minority? Without doing anything, you have not done anything. You have simply allotted shares to yourself. By that, the minority has now reduced the percentage. Earlier they had 10%, meaning 10,000 by 1 lakh. Now they are having 10,000 by 2 lakhs. You got it? Now, 10 by 200. Okay. So that is 0.10. They have gone, definitely it will be less than 10. It could be nearing 5. Am I correct? 5%. Which means you have straight away, you have diluted the minority. Therefore, to prevent this, to enable existing equity shareholders to get priority when the company makes further issue. So, because of section 62, whenever a further issue of shares is made, it should be offered to the existing shareholders in proportion to their existing shareholding. In proportion. So that if that is done, what will happen? When you wanted to issue this fresh 1 lakh shares, you cannot allot the entire 1 lakh to yourself. You will have to offer 10,000 shares to the minority. The minority accept it and they pay 10,000. Then now they will become 20,000 shares against 1 lakh 80. Same percentage is maintained. Company has grown, but percentage of minority is still 10%, which means minority cannot be diluted. My guru used to ask, when a photograph is enlarged, which part will be enlarged more? So, all parts, now. Don't tell me head. Everything is enlarged. Now, when you enlarge a photograph, it goes proportionately. Now, same way, when the company's share capital is expanding, everybody should get the same proportion in the increased amount. The idea is to prevent majority from diluting the minority. That is why I gave this elaborate example. So that is the purpose of preemptive right. For example, when Mukesh Ambani decides to go for further issue of shares, the law forces him to go for rights issue. So that he can't go to a totally different group of shareholders. First, he has to offer these shares to the existing equity shareholders. One more thing is there. We saw that application for shares is an offer and allotment is acceptance. Correct? So when the prospectus is issued, it is only an invitation to treat. Information is provided based on which the applicant applies for shares. That is the offer. When the board allots it, it becomes allotment. Now, in rights issue, it is the reverse. The company makes the right offer. Okay, so the company becomes the offeror now. Now, those of you who still remember Contract Act, I'm sure you learned it long ago. I do not know how long ago. Maybe you remember it, maybe you don't. But you might somewhat vaguely remember that an offer can be accepted only by the person to whom it is made. So, good old Macaulay rule in Contract Act. A valid offer, an offer to be valid, should be accepted only by the person to whom it is made. Right. But in rights offer, there is an exception. In rights offer, there is a right to assign or transfer the right to someone else. This is called right of renunciation. To renounce means to give up Means the offeree renounces his right to subscribe. Why is this given? Because you see, you decided to go for another 1 lakh allotment. Now, you are all big Marwadis. You are all big people having so much money, boss. I am a poor auditor. I have no money. So now you are telling me buy the share, Shrikant. One share value 600 rupees. You are also a shareholder. Take it like that. No, I don't have the money. Where will I go? But now what I can do, instead of me buying it, I can go to my friends who are my well-wishers and say, hey, look here. I'm getting offered this company. They are trying to dilute me. Would you guys like to come in? So I can renounce my right in favor. So that me and my friends together will now hold 20%. Thereby, I will still be able to have some influence in this company. See, so if you see the legal background behind this, it's a very laudable goal. But in reality, rights issue are seen as an opportunity by the existing shareholders. Right? So when Mukesh Ambani came out with the rights offer, I don't know, I had that rights thing somewhere. I'll just show it to you. Give me 1 minute. I will show you one. I will show you that. Give me 1 minute. See, this was in 2020. Give me 1 minute. I will open it. RIL came out with the rights offer where they gave rights shares 1,257 per rights equity share. So the issue price was 1,257. One right equity share for every 15 shares. So at that time, how many rights shares I had? Let me again see my portfolio and tell you one second. Give me 1 minute. One second. I had 1,600 shares in Reliance, 1,300 400 shares in Reliance. So I got about 16 shares. That much I know. I got about 16 shares in Reliance. 16 shares I got in Reliance. So those 16 shares I was getting at 1,257 per equity per right share. Right. Now, at that time in the market, the rights share was being quoted. I mean, the share of Reliance Industries Limited, when this offer came, I think the offer was made on May 14, 2020 was the record date. Anybody who was holding shares on May 14, 2020, right? I hope this is visible. Yeah. Anybody who was holding shares on May 14, 2020 was entitled to the rights offer. So the opening date was May 20. And if you wanted to renounce your shares, meaning if you don't want to buy, you want to give to somebody else. Of course, I gave my example that I will give it to my friends and all. But in reality, renunciation is given to anybody. There's no restriction like that. So, but that should be done within May 29. And before June 1, you should provide DMAT details. Then on June 2, your rights enrollment will be credited and you will get your shares. What I did was I didn't go for the application for the rights. Instead, I went for I sold my right. Means I renounced my right. So that was a decision I took based on my broker's advice. But that was not wrong because I did a simple calculation. See, 1,437 or something was the market price, whereas I'm getting it at 1,257. But the beauty was the rights was valued at a high value at that time. See, normally what should be the price I should be willing to give? Market price is 1,400 and odd minus 1,257. Whatever is that, that should be the premium for the rights now. But the rights was actually valued at 375 or 380, which was pretty high. Over and above the difference between these two. So it made sense for me at that time to sell the right, take the money, buy the share in the open market. In which case, my acquisition for that share became 1,220 like that. 1,220 or something I did. So it was actually beneficial for me at that time to sell the rights. Thereafter, the rights price started coming down. The price of the rights started coming down. please understand, during this period, during this period, the right shares were being quoted in the rights were being quoted in the market. Up to this date, up to May 29 midnight, the rights, my right to renounce these shares, 16 shares, was being sold at 370 or 80 rupees. When I did my math and I found that financially it makes sense for me to sell the right and buy the share in the open market at the same time. Okay. And then subsequently, I will sell when the share started going up. Then I sold it and I came home. Okay. So that was the point. I hope you understood the story I'm telling here. But see, it made sense at that time for me to sell the rights. And another beauty is, see, also you can see this Reliance came out with not only a rights issue in 2020, but also a rights issue at a partly paid. So you have to pay only 314.25 on application. Balance you paid only later. So of course, my brother-in-law argued that instead of doing that, you can as well go for buying the share on a rights basis and all. Maybe it would have made sense. But again, it's not as if you will get more money. The rights also were being traded. See, Reliance rights, the Reliance partly paid shares are also now traded. You can go and check out in the NSE website or wherever you normally go. Even though the partly paid shares are being quoted. In which case, whatever is the movement for the fully paid shares, proportionately you will find partly paid shares are moving. That's all. I thought this being slightly interesting, you might like to know about it. So I took the liberty of showing you these details. Coming back to the dry and monotonous legal provision, let us take it up. Give me 1 minute. Yeah. So I showed you that a right can be renounced. And believe me, since everything in the market is valued, the option, the right to sell is also valued. I have a right to purchase now. That right is also a valuable right. And it can be sold. Only for that small gap. I showed you the data up to that date only. After that, there is no right. Your right has expired. So automatically that product will become zero value. The rights are traded separately. Absolutely correct, sir. Huge buzz about it, and the rights were being traded at an atrociously high sum. See, why is that fellow paying that money now? Because, see, there is a scarcity of Reliance shares, ma. So if a guy wants to buy Reliance share now, he can buy only like this. So they were buying. So there are people who are willing to buy the rights and use that right. And using that right, he can apply for those shares. So that people will consolidate. From me, they would have bought 16 now, like that. From many, many people, they will take, and finally they'll consolidate and buy 2,000 shares in Reliance. Okay. Given today's price, what is the price today? Reliance today's price, 2,740 shares, rupees per share. 2,740 rupees per share. See, that is what I'm saying now. Sometimes, see, that day I was thinking I was great and I sold the rights, purchased the share, then waited for the share to go up. I think it went up to 1,700 or something. 1,700, it was hovering there. Then I said, enough is enough. I sold, I booked the profit, I came out. I reinvested that money in Wipro. That's a different story. Foolish now. I would have simply kept quiet. I would be having another 16 shares at 2,740, which I would have acquired at 1,000 watt. Less than this price I would have acquired. Am I correct? Anyway, see, no regrets, but I'm saying there is a problem. Good. So, I'm just contextualizing rights concept for you so that you will feel that, this practical. Rights are also traded very much at that time. Now, if you go on, now, at that time, suppose if TCS comes out with the rights issue, then during that period, it will be traded. Only those people who have the right can buy. Of course, somebody who bought the right from me can sell it at a profit. So yeah, it could be traded. But then it started tapering. I think many fellows short sold the rights. I have a feeling it started going down. Once after I sold my rights and all, it started going down. Okay, right. In fact, another play would have been, again, stupidly I'm telling, another play would have been sell it, short sell it, wait for the last day when it would have gone down. But then the euphoria at that time for Reliance was so high that people were predicting it will go up only. The rights will go up. But it didn't go up. It went down. Finally, it settled down where at the normal, it can't go below that also. Now, see, who will be a fool to sell? Otherwise, they would actually buy the share. Now, they will apply for the share. Now, why will they renounce the right? So the difference between the purchase price, the offer price for the rights and the market value of the share would be one limit, now this side limit. Because why would I sell below that difference? Because if you are going to pay me less than that, am I a fool? I will as well buy the rights, the share. I will as well use the right and buy the share. Why am I a fool to give it to you at a lower price? So it was like that. Why I sold my right? Because that amount they were willing to pay was more than this difference. Going down. And all funny things happened. And remember, it was all happening during pandemic, peak pandemic. All of us were sitting at home and everything was happening on screen. No human beings at that time. Anyway. Where at any time a company proposes to increase its subscribed capital by the issue of further shares, such further shares shall be offered to the existing equity shareholders as nearly as circumstances admit, in proportion to the paid up share capital on those shares. So this is the preemptive right of equity shareholders. Whenever a company goes for further issue, those shares should first be offered to the existing equity shareholders as nearly as circumstances admit, in proportion. Suppose some odd value is there. When they are dividing now, fractional shares are coming, one fraction of a share. Obviously, that part alone, they cannot give a right now. So they will round off or they will give you compensation and such. So fractionally, that's why I said as nearly as circumstances admit. So when that happens, they may round it off. Such offer shall be made by a notice and shall remain open for a specified period, being not less than 15 days or such lesser number of days as may be prescribed and not exceeding 30 days. So this interregnum period should not be less than 15 days and should not exceed 30 days. Friends, please look at the red letters in the bottom. The such lesser number of days as may be prescribed. The CG has been empowered by the Companies Amendment Act notified to prescribe a lesser period for acceptance of rights offer. CG has accordingly prescribed 7 days. So the Act talks about minimum 15 days and maximum 30 days. Central government has prescribed now 7 days. Wide Rule 12A, which is effective from 1/4/21. So the number of days prescribed by CG is 7 days. Okay, they have prescribed lesser. They can prescribe lesser. So they have prescribed 7 now. So CG has prescribed that it is enough if you keep the rights offer open for 7 days. Right? This is the minimum number. Minimum. You can have more. Not more than 30, but more than 7 you can have if you want. But it cannot be more than 30. And it cannot be less than 7. Because 7 is now prescribed by the central government. Okay. Now, you are the promoters of the company and you say, I don't want to do this nonsense. I don't want to give the shares to the existing fellows. Is there any way I can do that? No. Except if you are a private company where, I'm sorry, I will come to the exception later. Right now, where 90% of the members of a private company consent in writing or by electronic mode, the offer may remain open for lesser periods than stated above. So, private company alone, provided 90% of the members give their consent, it can be kept open for lesser periods. Unless the articles provide otherwise, the offer shall be deemed to include a right of renunciation. Yeah. Quickly to answer Jaspreet's question, yes. During the rights offer opening period, now till the last date for renunciation of right, now till that date, the rights will be traded, which means the guy who bought the right can further sell it. Why not? Can sell it. Now, I am introducing ESOP here because we are going to talk about ESOP. Now, we saw yes, issue of set equity shares, section 54. That is totally different from ESOP. Okay, employee stock option scheme means option given to the directors, officers, or employees of a company or of its holding company or subsidiary company. So, the option is given to these people to buy, to purchase, or to subscribe for the shares of the company at a future date at a predetermined price. So basically, ESOP is an offer given. Now, the other day we had a question on sweat equity shares. The question was, should the sweat equity shares, should it be given uniformly to all the employees? I said no. Sweat equity shares will be given based on intellectual property right or some know-how being given or value addition. So this cannot be given to all employees equally. But ESOP is not like that. ESOP should be provided uniformly. If they are your employees, they should get uniformly. You cannot distinguish, you cannot discriminate. But you can create classes of employees. And you can say that for each class of employees, the entitlement will be different. Within that class, you cannot discriminate. You can discriminate a class and say this is one class, this is another class. But you cannot discriminate within one class. So if there is a class, for example, employees who have been in, usually ESOP will be given based on length of employment and the emolument. Or they might not use emolument, they will use designation. So they will say GM and above, up to ED. Okay. Those who have been in service for 15 years, 20 years, whatever. Based on that, they will say you will get so many shares. So higher and longer, that could be the criteria for distinction. So I can say higher and longer. Those who are in the higher position and who are in the longer period will get more. Those who are in the lesser position and lesser period will get least, which means a probationary officer who joined and has been with the company only for 2 years may get 10 shares or 5 shares. Whereas an ED who has been in the company for 30 years or 35 years will get maybe 300 shares, 500 shares like that. Option to buy. So the company will also fix the price of the share at a price which is less than the market price. The idea is to give an incentive to the employee. This is basically a HR initiative. So once the ESOP is announced, employees will be given the ESOP scheme. All of them will be sent the ESOP scheme and said, please go through it. Usually HR, what they will do, they will call people for a town hall meeting where all the employees are called online town hall or to a physical location in the company or maybe some auditorium where the MD will come and talk and the HR people will talk and they will then some professional will come and explain to them what is an ESOP and also what are the terms and all and explain to them. Because most of, all employees may not be chartered accountants like you, brilliant financial geniuses. You could have dumb engineers out there, BCom walas will be there, clerical grade fellows will be there. So how will they understand? So for them, we will conduct workshop and make them to understand what it means for them. So they'll be told, once the ESOP is announced from such and such a date, you have an exercise period. For eligibility period, we have given. So if you work for 5 years, you're eligible to get 100 shares at 200 rupees. Market price is 400 rupees. No problem. Now, you need not pay 200 now. We are giving you 2 years exercise period. Keep watching. Whenever you find it is ripe, come and exercise your option. Meaning, there's a form given in the scheme. Fill up that form, sign, attach it with the check for that number of shares, 200, send it to us or transfer the money and give the form to me. or we might even put it in the website, you upload it. Immediately, we'll allot those shares to you and register it. You will become the owner of those shares. But some companies may also prescribe a lock-in period. Once the shares are allotted, they cannot be sold for 2 years or 3 years like that. They might put a lock-in period also. So this is called ESOP, Employees Stock Option Scheme, right? This is a HR initiative to build employee loyalty. See, again, you cannot say, if you want to buy my ESOP share, then if you buy, you cannot leave the company. You can put a lock-in period on the share. You cannot put a lock-in period on the employee. The employee can take the share and he can get the option and he can quit next day also. You cannot prevent him. Okay. Then once he wants, he will come and take the option. Nobody can. He may be an ex-employee, but his option was given when he was an employee. He can, even after ceasing to be an employee, he can. If you want to exercise the option, you want to be an employee, he will go to court and get high court order. That will be a violation of Contract Act. That will amount to restriction of right to carry on any activity peacefully. Employment. You cannot prevent a person from quitting by any means. Okay. Now, why I made this point about ESOP? Section 62 says ESOP also is an exemption. Normally, shares should be offered to the existing shareholders, right? But 62 says, if it is an ESOP, then you need not offer it to the existing shareholders. ESOP option is a kind of exception to the preemptive right, right? But for that, you should pass a special resolution. ESOP scheme is subject to special resolution. And there are certain, I told you, these exercise period, lock-in and all that will be contained in Rule 16, which I explained. You have to comply with. Suddenly, Arya has become worried. And she is asking, Arya Schanberg, welcome. Is mentioning sections in an answer necessary? No, not necessary. You will not be given 0 or no marks because you didn't write sections. So, but if you are able to remember sections and quote them, the chances are you might get half a mark more. Like that. So if you don't remember, it's okay. If you are unable to remember, it's okay. Right? But if you remember, it will be nice. If you can. But if you don't remember, it's okay. You won't be penalized for not remembering. For example, see, examiner, I'll tell you the mindset of an examiner. Paper character exam mindset is like this. I look at an answer, I read it now. What I normally do is, I give that person, see, if he's way within the ballpark and the answer is not a wrong answer, I am willing to give him 50% of the marks. So if the question is carrying 4 marks, mentally I've already given him 2 marks or her 2 marks. I am reading. Now I am looking for reasons to add marks to it. So I find well-argued answer, clearly law is stated correctly, and all that. Not bad. I will give another 1 mark. Because after all, the student has understood the law, has applied the law correctly, he or she knows the correct context, etc. Now, suppose I find, so already on 4, this person has got 3. Now, and good handwriting and all, I'm able to read what they have written. I'm so happy. So 3 given, sir. Now I find, according to section, wow, she knows section number, 3.5 on 4, This is the difference. Are you able to understand? That half-mark journey you might miss out if you are not able to remember section. There is a small edge that a guy like Srikanth would have had over you. Neat handwriting, good English. I don't know about English. Neat handwriting, good control over the English language. And I also used to remember section numbers. So my marks in law would be higher. But definitely you are getting 2 out of 4. So definitely you are getting that 55 marks. 45 to 55, sure, you read my notes, you be somewhat thorough in the sections, go with confidence and write. You are getting 45 to 55, sure. Now the journey from 55 to 75 is what I'm talking about. 55 to 60, 65. Why you need that 55 to 65? Not 2 reasons. 1, if you are aspiring for a rank, yes. Or if you want to clear the group with a good aggregate. You don't know, maybe there's another subject there where you are not at all confident. There you are just barely going to get 40 or 42. Then this 60 is going to help you cross the aggregate. See, I'm giving you pure strategic way of approach. So it's up to you what you want to do. But not knowing is not a problem. Beautiful. No problem. See, I'll tell you. You might think that Srikanth, as usual, is wasting my time. No, I will do one thing. I'll complete rights and then I will tell you this thought that comes to me. So ESOP is an exception. Also, company can allot shares to any person. Any person. Meaning, see, this section is badly drafted. I'm sorry. Badly drafted. That is, why they put A, B, C, I don't know. Basically, the preemptive right of shareholder is there. Any further issue of shares should be first offered to the existing shareholders in proportion, etc., etc. Okay? ESOP is one exception. Provided that they could have told. They have not put provision. They have put it as B. And one more provision is where they want to skip. Say they don't want to give to the existing shareholders. Then, and they want to allot cash for consideration other than cash. Then, in that case also, that further issue of shares need not be done. You can allot to that person, provided you pass a special resolution and you get a valuation report by a registered valuer in the case of consideration other than cash. So this B and C are logically exceptions to A. A is the rule. A is, if you are going to make a further issue of shares, you have to go for rights offer. But when you're doing an ESOP, pass a special resolution, no need. When you're going to allot shares to any other person for cash or other than cash, pass a special resolution, valuation report. I seriously don't know why this way of drafting they have done. In my humble view, it is wrong, but it's okay. Just remember the way I'm telling now. Preemptive right, ESOP is one exception. I want to skip, I want to give to any person for cash. Go ahead. Pass a special resolution, get a valuation report in case of consideration other than cash and proceed. Correct. Any person need not be employee for ESOP or even existing shareholder. Any person. So in the old section 81, this was an exception, proviso. Here they have foolishly put it as C. I don't know why. I use the word foolishly very boldly. So I've been teaching this law since 1992, boss. I've written a book on this subject. Simply the MCA has sat and done nonsense. They could have given it to chartered accountants or company secretaries, chartered accountants. We would have given them the right law. We would have told them how to draft. Okay. Or a good set of lawyers and chartered accountants would have been ideal team. With a couple of company secretaries to do the footwork and the grunt work, we would have done it for you. Instead, they try to reinvent the wheel. I don't know why they do this. Sometimes when I'm talking, you'll find a kind of, that chartered, I will be talking as if chartered accountant means that we are the ultimate like that. Natural pride, na? Don't you think I'm entitled to that pride and you will also be entitled to that pride the day you become a member of our institute? Yes. So that's why sometimes I keep, even my partner will be surprised when I talk. Enna, you are talking like this because he's also a cost accountant and his wife is also. I tell my partner, Baba, we are the Royal Bengal Tiger. Once a chartered accountant enters the room, imagine a Royal Bengal Tiger has entered the room. Just imagine that scene. All other, they'll be seeing what this animal is going to do. Because we bring with us so much knowledge. Believe me. And I'm telling you, the day you qualify now, you are straight away Royal Bengal Tiger. But maybe, see, I am an 8-foot Royal Bengal Tiger, man. Slightly bigger because I've got experience. I know how to hunt. You are a young Royal Bengal Tiger with all the power of a young Royal Bengal Tiger. Another 4 years, you will become 8-footer. You will be ferocious animal. Nobody can come near you. Always have that confidence in you. Now, so now one more exception is 62.3. They themselves have given it as an exception. That is, where there is a debenture issued to or loans obtained from any government. So you've taken you issued debentures or you've taken a loan from any government, state or central. Hence, for reasons best known, that government may consider it necessary in the public interest that such debentures or loans or any part thereof should be converted into shares. So they want to convert these debentures into shares. Maybe there is a terms and conditions of the issue of debentures. They were provided there. Or the government feels this is what it is, convert. Then you cannot go for further offer and all. You can't go to the central government and say, dear Mr. Central Government, I'm very sorry. According to section 62, 1, I have to offer it to the existing. Hey, I am central government. Do it. Okay. So there is one exception, right? 62.3. Normal debentures and loans may carry an option for conversion. At the time of issue of debenture, you have told you will convert. Nothing in this section shall apply to the increase of subscribed capital of a company caused by the exercise of such an option. Because at the time of issue of the debenture, you have given. This is not central government. It's any debenture and loan carrying an option to convert. But those terms should have been approved by a special resolution passed before the issue of debentures or raising of funds. That is, you cannot issue the debenture, raise the loan, and then pass a special resolution. No. Before the issue itself, you should get the approval from shareholders by way of special resolution that we hereby authorize you to issue debentures for 50 crore with the right or option to convert into shares. Once that is approved by special resolution, if that option is exercised, then 62(1) will not apply. This is for any debenture. Second one is where 62(4), which I told you. Central government you have issued or borrowed. Now you can't go to central government. I told you, no, sorry, central government like that. Central government said, no, go and convert. Then this section will not apply. Okay. Here it doesn't matter if the terms of issue of the original debentures were having a conversion option. Even if there is no such option, if the government is the lender or the government is the debenture holder, then straight away convert. Okay. Then nothing in this section will apply. Where the government is compulsorily converting its loan into shares. Remember what is happening here. Going beyond the thing. The government is now trying to control the management of the company. Suppose the loans are huge, they might convert, then they might get 20% stake in your company. So you may not want it. You might want to pay them and you might want time to pay. Nothing wrong in a democratic government. You can do that. So here they give you the right of appeal. So you are getting a direction from the government for conversion. It is acceptable to the company. Okay, I don't mind, sir. You take the shares. Yes. Then absolutely no appeal. The authorized capital in the memorandum shall stand increased. Automatically, these shares will be allotted. Government will get. But you are not acceptable to it. The company says, no, sir. Please, I will pay you the money. Give me time. Another 3 years, I will pay the money. Please wait. Whatever. So you can go on appeal to tribunal within 60 days and argue before the tribunal. We will pay, please. The government pleader will come and argue. The government advocate will come and argue. No, this company is a useless company. They're keeping on delaying. If you don't allow us to convert, we may not get the money also. At least as a shareholder, I might get some control over the management, whatever. Finally, the tribunal's job is to compare the two and say, appeal, yeah, company is right. Don't convert. Give them time. Then they will pass a strict order saying, if the company repays the loan within 3 years, no conversion. If they fail to repay, then conversion allowed. Like that. Whatever is it, the conditional appeal is allowed, then go. But if the appeal is dismissed, the tribunal says, no, convert. Then automatically the capital will increase and authorize. Now, in determining the terms and conditions of conversion under the government shall have due regard to the financial position of the company, the terms of issue of debentures, the rate of interest, etc., etc. Okay. So this is conversion of loans by company, right? So we have finished rights issue. Good. Yeah, unfortunately, see, the problem with the MCA is they I'll tell you, the CBDT is far better. They at least know what they are doing because they are experts in it. See, you take a couple of bureaucrats and give them power to enact laws, you are in deep trouble. I'm telling you, you are in deep trouble. See, this is an expert area. So you need, see, there the CBDT, they are very clear. They consult experts before the decision is taken. Lawyers, senior chartered accountants, fiscal matters, economists, everybody is consulted before a decision is taken. Simply you call a couple of company secretaries, have a meeting in Delhi, and then you amend the law. You not even amend the law, you amend a rule. Which power you have got? You. Which is why teaching this subject also becomes a real pain. Kyonki, see, earlier it was only the act which was amended, so it happened very rarely. Nowadays, this fellow sitting in his bedroom, this fellow amends the rule by a notification. We have to keep track. Sure. Really bugging. Okay. Recently I saw a nice movie. I know you're all studying for CA. You people are not seeing movies and all, but I'm almost retired man. Yeah? So my daughter in Coimbatore, she booked a ticket for a movie called Mission Impossible. It's a fantastic movie. I don't know, Tom Cruise or somebody. It's a fantastic action, and I saw it in the IMAX with my son-in-law and my daughter sitting there in Tuscany. So I've been to Rome. I've seen the Colosseum and all that, and Venice and all, but this IMAX experience was something awesome. Okay, the point I'm making is there's one scene in that where Tom Cruise will driving a motorcycle, and he will be going down the slope, and he has a parachute, and he has to jump and then get on top of a train. Awesome stunt scene. And then after I watched it and I came back to Chennai, my son told me, Appa, that Tom Cruise did it on his own. There was no stunt. Hey, what do you mean? No stunt. Then he showed me one video on YouTube where they actually show how Tom Cruise did it. They use that board and all. It's a fantastic experience. And so the scene I saw, but there in that scene, Tom Cruise, before he's going to do the practice of that stunt now, he gives one beautiful dialogue. I loved that dialogue. And as CA students, I want you to note this dialogue, which is so fantastic. He said, somebody was warning him saying, hey, Tom, be careful. Tom Cruise looks at that guy and smiles. And he says, don't be careful. Be confident. Wow. What a dialogue. Don't be careful. Be confident. I think this dialogue we should all remember as CA students. Don't be careful. Careful means, sir, will this come, sir? That will come, sir. Should I read that? Should I read that? You lose. Be confident. You will jump. You will land on the train. Believe and go. Then automatically your hand will control you'll go forward. You'll make that jump beautifully. You'll drop the motorbike. You'll be on the parachute. You'll free fall. Then you'll open the parachute and you'll move there and then get on the train. You will do it. This is what I don't know. I'm sure even Tom Cruise, if you ask him to write the CA exam, he will hesitate. So we are going to be better than Tom Cruise. But the dialogue is very important. I see many students, they are so careful, sir. Will this come, sir? Should I study that, sir? Should I do that, sir? Should I do this, sir? I'm saying, don't be careful. Study the important topics and be confident and go there. 100% you will get. See, today we have Pranay Vasishta coming and saying, I got 70. That is the journey I want you all to make. Forget passing, yeah. Those who are confident will get 70. Those who are careful will get 45. Don't be careful. Be confident. Okay, it's a beautiful line. Yeah, you are also the ultimate Royal Bengal tiger among friends and relatives. But I humbly suggest Darshan go beyond friends and relatives. Become the ultimate Royal Bengal tiger in the world. Believe me, once you become a CA and you get some reputation in the field enough, 5 years or 6 years down the line, you will see the respect given to you. Even you in an airport or in a station or in any meeting and all where you say, I'm a chartered accountant, you will see the difference. You will see the difference. See, for my mother, I am always good boy. See, of course, in academically, I was acknowledged by everybody as academically sound, but from other behavioral sort of, everybody used to think badly, including my wife and all. She'll say, what sort of human being like that? But for my mother, she will say, my son is a good boy like that. So family, you have to be very careful. Sometimes their appreciation may not be true. Okay, good. So once again, don't be careful, be confident. You watch that YouTube also if you can. And listen to Tom Cruise delivering that dialogue. Okay. Now, issue of bonus shares basically is conversion of reserves into equity. You know that this is merely a book entry. Am I correct? Debit general reserve, debit securities premium account, credit share capital or whatever. So, debit capital redemption reserve account to share capital. Bonus issue is always made at par. No premium, no bonus, nothing. Because, hey, you are converting security premium. Again, you cannot credit security premium. Think about it. So you're taking security premium, debiting, crediting. So it will be done at par only. Par means 10 rupees, 10 rupees only. So bonus issue is given to this fellow free. He's going to suddenly find a Christmas price. Because Dhirubhai many Diwali gift to us many times. In fact, the Reliance will come out nearing Diwali only. They'll come out with their bonus issue. And so newspaper will announce Dhirubhai gives Diwali gift to Reliance shareholders. So bonus issue is made in proportion. That is 2:1. Means members holding 2 equity shares will get 1 fully paid up bonus share. Okay. So normally you will be seeing that when we come to dividend, a dividend should be paid in cash. The one exception is issue of bonus shares by capitalization of profits. Right. The number of shares in circulations will go up after the bonus issue. So the share price may fall. But again, I'm giving example of Reliance and TCS. Post-bonus issue, these shares have actually gone up. See, normally the idea of coming down is the number of shares in the market is limited. So suddenly you're going to double it or make it half more by half and all. Suddenly there will be huge supply and may not have demand. So automatically there will be a huge selling pressure, but no buyers like that. So it will go down. But for Reliance and some good companies' shares, the minute these bonus shares come, nobody will sell them. But there will be huge appetite for these company shares. So the minute bonus issue is made, and even if 2 people sell, they'll be getting better prices. So that way, and the fact that this company came into the bonus issue will create expectation about that company. So price will start going up. So that's why I use the word may. Maybe bonus marks, I don't know. Now, bonus shares can be issued out of free reserves, securities premium account, CRR, capital redemption reserve. No bonus issue out of revaluation reserve. No bonus issue out of revaluation reserve. See, first thing when you get into a company boardroom, you will find the company secretary will say, no, sir. The MD will say this and the company will say, yes, sir, 3 bags full, sir. You know what? The MD will say, I think our buildings and land is very, very undervalued. Why don't we revalue the land? Go ahead, revalue. Okay, after you revalue the land, you allot bonus shares. Sorry, sir, not possible. No, that is my money now. It's your money only, but notional. So at the time, the company secretary shamelessly, he will tell, no, sir, according to the Bombay High Court, there is a decision, bonus shares can be issued on revaluation reserve. Then we have to educate the bugger and say, look here, I don't know about your High Court decision, whatever context was given. Today, the law is very clear. You cannot. Now they can't open their mouth. 63, even they have to agree because there is their law. How can they say no? In those days, this was not there. There was no actual prohibition in the act. Not joking. 97 May, in 90s, there was no actual prohibition in the act. It was only a guidance note of the Institute of Chartered Accountants of India. There was a guidance note of the ICAI which said you cannot issue bonus shares out of revaluations. That did not prohibit. Can you imagine? Till 2012, there was no prohibition. But in 97, what happened? The SEBI came out with the guideline. SEBI guideline very clearly, the LODR, which you will study when you come to final, very clearly, they said, say, promoter's contribution cannot come out of revaluation. So that they put a game on that. They said no. Once the SEBI guideline came, we are saying, but till then, it was very ticklish because as an auditor, my institute guideline says it cannot be done. I am bound by it. But the directors of that company, including the CFO, who is a member of my institute, he is bound by the Companies Act. So the Companies Act doesn't prohibit. So they used to say, we will allot and all. I will have to qualify. The best I can do is to qualify. Okay. Who reads the qualification? So a lot of public issue in those days, the bonus shares have been allotted out of revaluation reserve. Friends, that revaluation reserve cannot be just like that treated. Please understand. Your entry is fixed asset account debtor to revaluation reserve. then that revaluation reserve goes to the reserves and surplus liability side of the balance sheet. It doesn't stay there forever. Every year you are charging depreciation now, except land. Land, no depreciation. Other than land, if any revaluation reserve is there, whenever you provide depreciation for the up to the normal book value of the asset, you will reduce from the asset value. The balance depreciation on the revalued asset, that beyond the book value, the revalued portion is there now. The depreciation on the revalued portion should be reduced from the revaluation reserve. Only the revaluation reserve in respect of land will be kept intact. If it's any other asset, it will automatically get discounted. It will get reduced till it becomes zero. When the asset value is fully depreciated, revaluation reserve should be zero, which means that land is the only eye catcher because that revaluation reserve will be there. Nothing can be done with it. Keep it in the balance sheet, do puja, burn agarbatti, do arti and keep it. So nothing else you can do. Free reserve definition I'm now giving you because we have used the word free reserves. I'm defining it for you. Such reserves which, as per the latest audited balance sheet of a company, are available for distribution as dividend, which means capital reserves cannot be used. Okay, any earmarked reserve cannot be used. Statutory reserves cannot be used. CRR also cannot be used for declaring dividend, but it doesn't come under the definition of free reserve. CRR can be used for issuing bonus shares independent of being a free reserve. Similarly, securities premium account, specifically they have said, now, securities premium account can be used for issuing bonus shares. Free reserves means, which means you have to be very careful whether it's a free reserve or not. Is it available for distribution as dividend? For example, if your company has claimed 10 AAA or 10 AA benefit and special economic zone, you will have to create a reserve, na? SEZ Reinvestment and Rehabilitation Reserve account like that. To the extent of the profit claimed by you as exempted. See, 50% of the profit you would have claimed as exempt now. To that extent, you have to transfer to that reserve. Now, that reserve will be calculated in the balance sheet. Can it be used for declaring dividend? No, not available for declaring dividend. So, you have to be very, very careful. So, if you want to issue bonus share, see, for the first time, the law has actually provided for a section for issue of bonus shares. Earlier, there was no mention. The only two places where you found bonus share being mentioned was, one, utilization of securities premium account. Two, bonus issue not to be issued in lieu of dividend. It came in dividend. Other than that, nowhere you will find bonus issue out of all this. Okay. So now they have a section that gives you the thing. So authorization by articles. Ordinary resolution in general meeting should be passed based on recommendation by board. No default in repayment of principal and interest on fixed deposits. No default in payment of statutory dues of employees. Partly paid up shares to be made fully paid up. Compliance with Rule 14. Once announced, bonus issue cannot be withdrawn. Once announced, bonus issue cannot be withdrawn. Bonus issue will be announced by the board after passing ordinary resolution, and thereafter it cannot be withdrawn. Right. Once a company makes any alteration of its capital, it has to inform the registrar. Also under 62(4), if the government gives a direction, whatever, or whenever any redeemable preference shares are redeemed, a notice should be filed in form SH7 with the registrar within a period of 30 days of such alteration, along with a copy of the altered memorandum. Convertible debentures or preference shares holders are not entitled to bonus shares, because whenever I issue bonus shares will be given only for equity share capital shares. Why? Because the free reserves are available only for the equity shareholders. They are not available for preference shareholders. Okay, because once I pay first of all, convertible debentures, unless they are converted into equity shares, they are only debentures. So debenture holders are not entitled to bonus debentures or bonus shares. Okay, no, you cannot do that. Sometimes what companies do when they are, but that also, as at the time of issue of bonus shares, if you are a debenture holder, you will not be entitled. Okay. Also, at the time of issue of bonus shares, if you are a preference shareholder, even if you are convertible, you are not entitled to bonus shares. Okay. This is my answer. And I have never heard of bonus preference shares or not. No. Nobody gives bonus preference shares. See, finally, at the time of winding up, when I pay the debenture holders and I pay the preference shareholders, whatever is left, balance amount, entirely belongs to the equity shareholders. So, only equity shareholders per se. Suppose this guy has become an equity shareholder, then you can allot to him. At the time, if he is an equity shareholder, you can. But if he is an equity shareholder, then your question fails now. He is not a debenture holder. At that time, he cannot. Okay. This is my answer to your question. So, if you don't inform the registrar about alteration and all, fine. 500 rupees for each day and up to 5 lakhs. For an officer in default, 500 up to 1 lakh. Now we are coming to another very important topic, which is reduction of capital. Right? See, basically, I'll put it this way. Bonus issue not to be issued in lieu of dividend. I'll put it very clearly. You are the board of directors of ABC Limited. You have announced a dividend of, let us say, 20%, which means for every share I'm entitled to 2 rupees. Every share of paid up cap value 10 rupees, nominal value 10 rupees, I'm entitled to 2 rupees. Now you have announced the dividend, we are all very happy. Then you also inform us, you know what, this time, instead of giving you money, which means if I'm holding 100 shares, how much you should give me? 20 rupees now. Give me 20 rupees now. 20%. Give me 20 rupees now. Instead, you are saying, we won't give you 20 rupees. Instead, we will allot 20 shares. I'm sorry. For every 100 rupees, we'll give you 2 shares. 2 shares of 10 rupees each. So, for every 10 shares, I will get 2 shares. Instead of money, I'll give you bonus shares. No, not possible. Where a dividend is announced, it has to be paid in cash, meaning by money. You cannot issue bonus shares in lieu of dividend. You cannot say in lieu means instead of giving him money, you cannot give him shares. You have to give him only money. If you want to allot bonus shares. But you can't declare a dividend and then say, instead of money, I'll give you shares. You can't do that. I hope it's clear. It's a good question, Darshan. I hope you have understood it now. Now we move on to reduction of capital. When capital may be reduced. That's why I said cancellation is different. Already the authorized capital is there. The company is now going for reduction. Now what I will do, the time now is almost approaching 8 o'clock. It's about 7:55 now. Let's have a small break for 5 minutes. Just a biology break, maybe a cup of chai. Okay? Sir, break, sir. Thank you. So welcome back from that very brief, thing. I missed out a couple of comments given. One is that I can speak Kannada. Bhagyashri is asking. I am not really aware. I cannot speak Kannada, though my son can speak excellent Kannada. He was studying in Bengaluru for about 4 years. The pandemic, 1 year he was in homework from. He studied his law in Christ College in Kormangala. After about 1.5 years, he was speaking very good Kannada. And that too, he got a very local accent. And he can get into Bangalore, he can handle very well. And he will talk. So when I used to go there to meet him, he used to take me out for dinner and all, but talk very fluently in Kannada. So that way, I'm happy that I sent him out to Bangalore. It's a fantastic place. Cosmopolitan. He picked up Hindi, he picked up Bengali, and he picked up Kannada also. That way, I think that is needed. I missed out. I don't know why that asking of question of Kannada. And Jasprit says, we are not liable under section 447 for not writing section. That's a good one. But and she's also using image techniques. Very nice. Nice to know that you're using image techniques. I would also like to study what that is, and if it's good, we may learn. Because I have used mnemonics and I have used other types of memory. But imaging, first time I'm hearing image techniques. Must be something recently found out. Good job. Now we move on to another, I would say, very important and interesting area called reduction of capital. Friends, all of you are experts in accountancy. So I want you to imagine a balance sheet for a moment. A balance sheet. Let's see if I have the balance sheet. Let's see if I have here that. Because I remember having prepared a balance sheet. It was in an Excel sheet. Capital workings. This is for the rights issue. This is the, let me see, I'll just zoom it. I will make it a little big. See, let me explain to you this point. See, this company has got share capital 100, reserves 200, loan is there 70, 15, creditor. So totally 25, 80, 85. Fixed assets 345, current assets 50, 395. Suppose these fixed assets are sold, okay, fortunate. Now suppose they sell that. The situation is not like this. Let us say that their bank loan principal is 150. And reserves is not there. There is an interest. For example, I'm giving you just numbers. Now, fixed assets value is huge. That is, it's not 345. It's, let us say, 145. So I got only 195. I have to change the name of this company now. It's unfortunately limited. Right? So what is the difference? That is nothing but negative. Escape. Okay. No problem. Escape. This is the problem with working with Excel. You make an ass of yourself. Yes, so that's 300, 100. Abada, I have tallied my balance sheet here. But look at the situation here. Is the share capital truly represented by assets? In this situation, Unfortunate Limited, is the share capital truly represented by assets? I don't think so. See, if I really look at it, if the fixed assets are sold, I'll get, along with current assets, assuming they realize fully, I'll get 195. That would be just sufficient to pay my bank loan and some creditors. Yeah, that's all. Am I correct? So even there, I may not be able to pay the creditors in full, and I might have to put some namam on the bank and creditors and all. And shareholders will get nothing because it is an insolvent. -5. This company is insolvent. The net worth is negative. Now, such a company, tell me, what is the point in having share capital like this? So they will say, we will go for reconstruction. You understand? Now, with this background, let us approach our problem. Our situation. With this background, capital is not represented by assets. Capital is not represented by assets. Here this, I'm sorry. This 100 rupees capital, where is the asset represented? If I sell all the assets also, I can only pay my loan. This is still a 5 rupee deficit there, 10 rupee deficit there. Am I correct? So I will not get nothing. Zilch. So what to do now? So what we will do? We will go to the bank. We will tell them, Baba, please waive the interest in it. Okay, interest waived. I get 40 rupees benefit. Also go to the creditors. Please, I can't pay fully. I'll pay 8 rupees. So another 2 rupees there. 42 rupees. Now, these creditors and all will tell, look here, we are giving you benefit. What are you guys going to do? Okay, so the shareholders will say, see, our capital is not represented by assets. We will make it 0. We can't make it 0. We'll make it 10 paisa. Meaning, 10 rupees share, we will now make it 10 paisa. Balance 9 rupees 90 paisa till gone. Because I made loss. How can I now say I want it? Even the 10 paisa is there to make sure that in the case of winding up, this fellow will be a contributory. Therefore, 10 paisa. Otherwise, it should be 0. Actually, situation where shareholders are negative, net worth is negative. That means creditors are getting namam. That 5 rupees is creditor ka namam. Okay. So, precarious position, Unfortunate Limited. Another company, I will call it Fortunate Limited. For Fortunate Limited, the situation is totally different. It had fixed assets, which it sold. By selling such fixed assets, this fellow got a huge... see, in addition to the existing current assets, this fellow got cash. So suddenly he's sitting on 495 worth of... Straight away, this becomes... I'm sorry. Sorry, I'm very weak in numbers. Surprising that I became a chartered accountant. How even my father could never believe how I became a chartered accountant, because I was very weak in arithmetic and numbers. Some of you may be very brilliant in numbers. I'm very weak in arithmetic. I can't do mental maths and all. Some of you may be very good. As you by now have noticed, my skill is not in number work. My skill is in language. And that's why I score in law and auditing and theory papers. Accountancy, I got 64 by struggle. I went out of the way to study accounting. And costing was a different story. Somehow costing was never a problem for me. Costing I loved. Because in costing, it wasn't number game. It was logic game. I could understand. The accounting is so boring. Yeah, number. So I really hate it. Telling you, I'm not. That's why I never became a teacher of accountancy. Logic was. My father was himself a teacher. He used to teach accountancy. He was a brilliant teacher of accountancy for IEEE Institute and all. But I was very poor. He was one of the reasons why my father himself said, "You will never become a chartered accountant." But I became. That is different. All India rank holder and all. But even he was shocked and surprised. He wanted to send my paper for revaluation to see whether I really passed it. Imagine a father who wants to do that. He didn't believe that some fluke has happened. This fellow passed. When I got CA final also rank. In fact, before I continue, I'll tell you this also. See, holding and subsidiary company, till the very end, I never learned chain holding. Holding and subsidiary, I quit. I didn't study at all. Because I didn't understand one bloody nonsense and I never understood anything. But the rest of the topics I read very well. That's what I'm saying. In spite of that, I got 64 in accountancy. But the point I'm trying to make here is, I'm very weak in numbers. Very surprising, no? For a chartered accountant. Okay, come back to our friend Fortunate Limited. See what is happening here. Huge reserves, that too capital item. Sale of fixed assets, he has got money. And that is lying in the current assets. Now, this company is in another situation. They are having capital in excess of want. See, they need how much capital? They've already got fixed assets. Another 220 rupees for repayment of loan. Share capital 100 rupees. Balance 275, another 200 is out behind. No, they don't need it here. They can also give it. So to that extent, what they will do, they will return the capital which is in excess of wants. So they will say, proportionately, we'll give it back to you. And that's also possible. That also can result in reduction. That is, where everybody is already, it's like a buyback. It's like a buyback, except that proportionately we will give back. And we will give you rework shares. And you take it. So two situations are possible. One is when capital is not represented by assets, Unfortunate Limited, or return of capital in excess of want, overcapitalization. Okay. In these two cases, you can reduce the capital. Reduction is not permitted if the company is in arrears in the repayment of any deposits accepted by it or the interest payable thereon. Okay. Now, how capital may be reduced? By extinguishing or reducing the liability of any of its shares to the extent not paid up. So, for example, Reliance can come back and say, hey, we are hereby reducing. We are in excess. We have money in excess of wants. We don't need your money anymore. So, we are extinguishing the liability. Whatever amount you have paid up to now we have paid, we will allot shares for it and that's it. Means that amount equal and fully paid up shares will give you. And we will reduce the liability on it. Or either with or without extinguishing or reducing liability, cancel any paid up share capital which is lost or is underrepresented by available assets. This is where the confusion starts. They are using the word cancelling here. But this cancelling is different from that cancelling. Here, we are cancelling paid up share capital. There, we are cancelling paid up, authorized capital. Okay. Any paid up share capital which is lost or is underrepresented by available assets, or pay off any paid up share capital which is in excess of wants. Either way, they can either reduce the liability, or if it is a fully paid share, they can cancel it. Or if in case they want to pay off, they can pay off. So they can say, we are reducing the value to 1 rupee, balance 9 rupees together with the bonus, we'll give it back to you. Take it. With the premium, they'll give it back to us. 1 rupee they'll retain. Why? Because that liability should be there now. So you have to amend your memorandum by reducing its share capital or the number of shares. Also, you have to pass a special resolution. Go to the tribunal for confirmation. Before giving the confirmation, the tribunal will give a notice to the central government, registrar, SEBI, creditors, so that the creditors will come and say, we have objection or not. If they have no objection, proceed. Before giving its confirmation, this notice will be sent by tribunal to stakeholders, who may send representations within 3 months. If no representation is received, then presumption has to no objection. Then, if there is any representation, that will be taken into account by the tribunal. For example, if any creditor says, I am not agreeing to this reduction, the tribunal may say, please pay him or provide security. Then you come. So if the debt of claim of every creditor has been either discharged or determined or secured, or consent has been obtained, you go file a dispute, get his consent and come. Before making any order for reduction, they have to get. So you will have to go to the creditors and at least convince them to give you a no objection certificate. The tribunal should not sanction any application for reduction of share capital unless the accounting treatment proposed by the company for such reduction is in accordance with the accounting standards, and a certificate to that effect by company's auditor has been filed. Good. Nice to know that they have some regard for us. The order of tribunal confirming the reduction is to be published by the company in such manner as the tribunal may direct by way of public notice. It should be delivered to the registrar for registration within 30 days of receipt of order, together with a minute, meaning a noting, approved by the tribunal, showing the amount of share capital, number of shares, amount of each share, amount at the date of registration as deemed to be paid up. Then the registrar shall register the same and issue a certificate. Okay. See, the consequence of reduction of capital is reduction of a member's liability. At any cost, you see, if it's an unpaid share, my liability is gone. So, please understand, this part of the section will be applicable only for partly paid shares. This will be relevant only for partly paid shares. Fully paid shares, there is no liability. Reduction will not have any reduction in liability. It's a loss, that's all. But partly paid shares, what will happen? 10 rupee partly paid share is now becoming 2 rupees. Means 8 rupees liability written off. This will be relevant only for partly paid shares. Please keep this in mind. If you miss that, you will become confused. Okay. Now a creditor who is entitled to object may find his debt or claim was not entered in the register. This is due to his ignorance of the proceedings or the effect of reduction on him. After the reduction, the company defaults in settling his claim. See, this fellow's name was left out of the list. Maybe he didn't send a mail, or it was due to his ignorance, etc. Then, please note, a creditor's name has been left out. Am I correct? A creditor's name has been left out. Now, after the reduction, the company defaults in settling his debt or claim. Then every member, as on the date of registration of tribunal's order, shall be liable to contribute according to the liability to contribute on that day. Meaning, see, once the registrar registers, the liability will be reduced. But on the date of registration, his liability is there now. That liability will still continue with respect to a creditor whose name was left out and who has not been paid. In case the company is being wound up, then on application made by creditor, and after he provides proof of his ignorance, tribunal may settle a list of contributors in this regard, even though normally they would not need to contribute because their liability has been extinguished. But if the creditor proves, my name was left out, I was ignorant, I didn't know, I'm something reason, then he will be reinstated and the liability will be reinstated, and this fellow alone will be entitled to get paid. So, bottom line learning from this provision I get is, we should take extra care in finalizing the list of creditors. Please don't let anybody out. Don't think that it is a smart move to ignore a creditor. No. Because tomorrow if that guy comes and says, I'm ignorant, Your Honor, then whoever was the contributory at that time. Again, my dear friends, folded arms. This is only relevant for partly paid shares. Fully paid share, nothing. Like that I can go. Because 10 rupees share, 10 rupees paid. Yeah, what more? Hey, come, what I should pay? Nothing. Go. So only for partly paid share. Has any, did Go First also go for reconstruction? I'm not aware is the correct answer. They might have gone, I'm sure. They would have gone for some kind of reconstruction. But I have a feeling reconstruction is possible only if you're going to continue to operate. I think Go First would have gone for, I think Go First is in insolvency. I suppose they are in insolvency. If they are not in insolvency, one more thing. When you go to the insolvency board, there is a tribunal. Tribunal may itself give you a revival option. That revival option could include reduction of capital also. Please note. So that's all. It's all combined. So I'm not aware of Go First. I'll check up and I'll let this. If you want, you can also go and check up. I'm not aware of it. Okay. In fact, the first time I came to know about Go First was when they said it's going. I never knew such an airline is there at all. I always normally travel by Air India or Indigo. This SpiceJet also rascals, I don't travel with them. Once or twice I got really affected. So I told myself, you book in Indigo or in Air India. That's all. Other than that, no other airline I go. First or go last, nothing. So that's what I said. See, one more thing now. I will learn only what I need to learn. So for me, Go First is not. If in case Go First is hiring me, then I will know everything about Go First. Right? Bottom to end, I will know. A lot of companies reduce capital. Every year, at least 100 petitions are given to the tribunal for reduction. It happens. Mostly it will be reconstructions, where the creditors are going for a haircut. At the time when they go for a haircut, they will say, hey, you also reduce. Then you go for reduction. That is all. So usually these are companies that have become NPA and are trying to revive themselves. So before revival, they will go for reduction to remove the liability, write off the losses and all that. You remember? So you debit share capital, debit creditors, debit everything, then credit capital reconstruction account, then debit capital reconstruction and write off losses. So that all the accumulated losses, preliminary expense, everything, you write off so that your balance sheet becomes better looking. So for such cases, they have gone for can do. Okay, so we've seen this. Moving on. Please note, 66 deals with reduction of capital. It is a general provision. Nothing in this section shall apply to buyback of its own securities by a company under section 68. So 68 is the major exception to 66. So normally, if a company wants to reduce its capital, it has to go through 66. But when it is complying with section 68 relating to buyback, then 66 will not apply. Nothing in this section shall apply to buyback by its own securities by a company under section 68. Right? If any officer knowingly conceals the name of any creditor, knowingly misrepresents the nature of the amount of the debt, abets or is privy to any such concealment or misrepresentation, he shall be liable under section 447. I think this 447 is coming regularly. Similar to 420 of the Indian Penal Code, 447 of the Companies Act 2013. Now, we have another 3 minutes more. I have two options. I can either stop here because tomorrow we can start. Tomorrow morning, we have a session. So, instead of starting this prohibition by a company of its to purchase its own share, I will stop here and I will sort of hope to meet you all tomorrow morning at 7 a.m. 7 a.m. in the morning. We'll go on till 9:30 when we will hopefully, inshallah, finish this topic, share capital and debentures. Okay, this is my goal. Thank you very much for a wonderful evening and nice to know this. Wishing you all a great evening ahead. and looking forward to meeting you tomorrow. Okay, bye.